Hello guys, this is Advantage here on YouTube. In today's video, I am going to show to us two ways in which we can trade the forex market. Is that clear? Two ways we can trade the forex market. Number one is using the software. Number two is price action trading. Now, softwares could mean combination of different indicators that provide you with entry level. Software is the combination of different indicators such as moving averages, RSI, stochastic, and so on and so forth. So put together, it provides you with entry level in which you take your trade. Entry level in which you take your trade. But the other one is the price action traders. Price action traders are those who do their analysis by themselves. They are those who analyzes the fundamentals and the technicals of the market, the structure. They look at the moving averages. They also look at the support and resistance and all of that. So they use the candlesticks to do the analysis and determine their entry level by themselves. Is that clear? I repeat, price action traders are those who analyzes the candlesticks by themselves and find their entry level and place their trade. They don't need any form of indicators to take a trade. So in today's video, I am going to show us a platform in which I personally use in making my trade. I use TradeView, some use investing.com and other. There are so many platforms, but I prefer using TradingView because it is very simple to use. So with that being said, let us get into TradingView platform and do some price action analysis. Hello guys, so the first thing you do is get to your browser. Just type this web address, www.tradingview.com, this one. So when you open, all you need to do is you sign in and register with your email address and have an account. Then when you open it, this is how it's going to look like. This is the environment of TradingView. Here is your tools. Here is your time frame and all of that, the indicators. If you want to use indicator, which this is price action, we don't need any form of indicator. So you can change your pairs, whichever pair you want to trade. These are your tools and all of that. So these are the pairs I trade. So for the sake of this video, we're going to make a fresh analysis. So let's pick up a pair. Let's say euro. So what do we do? Okay, let's say euro AUD. Let's say euro AUD. Okay, this is how the candlesticks actually looks like, so it's very simple. So first of all, you look at this, you shrink. This is a ranging market. It's a ranging market. So that is the first thing you must understand. If it's a downtrend, identify is a downtrend. If it's an uptrend, you identify, but it seems to be a downtrend here, but this is a ranging market because it's ranging from this corner, this place. So I've identified. So that is exactly what price action does. You just look at the chart and identify the direction of the market. So what I usually do is, the first thing I do is I plot my support and resistance, also known as the round number, also known as a zone. So how do you do that? So you just pick, and remember, the reason for drawing this line is the market moves by 50 to 100 pips. When it takes off, it hits 50 pips and then get to 100 pips and continue. So we're going to get this line. This line is going to serve as a support and resistance. We are not just drawing a line, we are going to measure it. So this line should be 50 pips from each order. So what we need to do is to measure and see if you must draw it correctly. So this is 103. So we may not go with this one. This one is 103. All right. Okay, this is 100. This is 100. 50 is here. Another 50 is here. Another 50 is here. Another 50 is here. So look at that tiny line. So that is where you measure those tiny lines at the background that is not visible. So those are the lines you pick depending the pairs. And I've also told you that these are the pairs I trade, so it's always very easy for me to understand. So when you look at this line we've drawn, this line will serve as a support and also a resistance, and it's also serve as a round number. Now watch carefully. From this zone to here should give us 50 pips. This is 46, so we move this one a little bit and it must be 50 pips. Okay, 53, 50 pips, that's fine. So we measure this one. Okay, this one is 50. We measure this one. This one is 50 also. We measure this one. Sorry. Okay, this one is 50. That is to say, from this point to here is 50. Then to this point is 100 pips. To this point is 150 pips. To this point is 200 pips. So we are going to take our trade by 50 pips movement of the candlesticks. Now after you've drawn this line, you are ready to go. So the reason for this line is, listen carefully, because when you do this, it's going to be very hard for you to lose a trade. Now watch carefully. When the reason why we are drawing this line, when the market touch this line here to this place, look at this same line, he did not cross, he bounced back and hit this place, 50 pips movement. Then from this place it take off again to the here, 50 pips movement. From here it takes off again to this place, another 50. He came down to here, another 50. That is to tell you the market moves by 50 pips when it takes off from any level. Now look from here again, from this place to this place, 50 pips. From here to here, 50 pips. From here to here, 50 pips. You see how the market moves. Look from here to this place, it cut 50 plus 50, that's 100. Then from here to here, so you see that, and come back here again. So you see that from all this point the market moves by 50. Now if you've drawn this chart this way, you are ready to go. You are already analyzing, you are already doing your price action. Now the other one now is to identify. You just look at, shrink the pairs and look at the direction of the candles. You find out that this market is a ranging market. It's not an uptrend, it's not a downtrend. Why is it a ranging market? So you can see the movement of the chart like this is ranging. The market is ranging. So this is a ranging market. So we are going to find a position, a ranging position. So let me take this off. Now we will take this up. Now look, since this things is like, the third thing you do is you draw your touches, which is also known as your support and resistance line. In addition, you know, this one is also support and resistance. Resistance becomes support, so you get your horizontal, your support and line. Now you are going to identify the movement, like here. Look at here. From here you take this thing to this place, you make sure it touch this zone and this zone. All right, this zone and this zone. So you see that anytime the market goes to this particular line, anytime the market goes to this line, it bounces back. Now it comes back again to this particular line again, this level, this zone, it touches here, it bounces back. And the reason why we draw this line here, this particular blue line, is because we want to identify how many touches. Each movement of the candlesticks have 3 touches before the trend expires. So look at this trend. So this candlestick must touch this place, this line, 3 good times before it expires. So from here, this is 1, this is 2, this zone is 1. Now another place here is 2, this place is 2 here. So we are expecting the third one here, or or here. So now you don't just take a trade in between these lines we've drawn, this one and this one. You don't take a trade. So if you want to position a trade, this is where you look at. You wait for the candlesticks. This is the point where trade should be taken, not in between these lines, because market does not stop in between. It moves from level to level, zone to zone, and it moves by 50 pips. So we cannot take a trade here. So when you draw this one, you are almost close to identify a market. Now when we pick another one, so you watch this one closely, you see this one, you see this one. Now he got to this point, he touched. This is touch number 1, this is touch number 2, and this is touch number 3. So this one has completed his own touch, so it will not touch this line again. It has expired. Now we are going to look out for a touch that have not touched twice. Now when you look this one, when you draw this one also from here, you see that this one has expired. 1, 2, 3. So it will not touch. So the next one we are expecting is this angle, that this market from this place, this zone, will fall to this level. So when we see a good opportunity, entry level, we will wait and watch. So this market will come back to touch this line to make the 3 touch to be completed. So we are going to wait either here or here. So we are going to mark this trade. So when we get opportunity, we just pick our target and just put our maybe our stop loss a little bit above the point and bring our TP to the line, this line we've just drawn. So waiting for this trade with this, now you've just done your analysis. You are just waiting for this position to get. Another video I'll be making is when to enter the trade, the signs to see before you take a trade. Even as it is now, you don't just jump into it and take a trade. There must be a confirmation after this your analysis that will enable you to take a trade. Now look at this one again. Look at this very one. Look at this very one. From here, how many touches? 1. From here, it touches here. It touches here, that's 2. It touches here, that's 3. It expires. So you target your trade within this place, so you should be able to take this profit. So this is how price action works. Okay, let's look at this example too. From this place, look at, watch. It touches, it got to this point. So if you are taking this trade, these are the areas where you put your trade, not in between these lines. So sorry, so this is the second touch, this is the first touch, this is the second touch. Okay, we have one here, so this one should be, okay, let me just, so this one should be, so this would have been your entry level. 1, 2, 3. This one, either this one or this one. So you tick any of them, any of it. So what you would have done here would have been just take your trade 50 pips. Me, I take, you can go 100, but I do 50. So I'll just put my stop loss somewhere here at 26 pips. Now I'll drag it to this point. If I want, I will leave it at 50. Then and open the position like 3 or 4 positions if I want. So you see that you are just winning your trade. So this is how price action works. Alright guys, in today's video we were able to use the TradingView platform to make our analysis called price action. So if that makes sense to you, please do well to subscribe to this channel and press the notification bell icon so that anytime I make a new video, you'll be the first to get it. Subscribe to this channel, ask your question on the comment section below, send us an email. If you need our trading platform, do well to send us an email so we'll get it across to you. See you next one.